So in this video, I'll be sharing my top 4 value stock or growth stock that I'll probably buy before the end of 2023. If you're gonna make a decision to buy, make sure you understand your goals, your risk tolerance, and your time horizon. So you have to bear these things in mind when you're purchasing stocks. Also, it's very important to know when to sell your stocks, because buying a stock is only part of the equation. When to sell all goes back to your goals. Today's video will not be the most detailed of videos, so I will be doing a more detailed analysis on each particular company that I have picked for my top 4. So look out for those videos. So if you're watching the market, you might be wondering to yourself, is it a good time to buy stocks? Well, that answer all depends on your goal, as I said before. But it doesn't matter if we're in a bear market, because the market has declined by over 12% the last time I checked. But despite that, there are some stocks that still has seen a capital appreciation. For example, in March, I did a top 4 video. I spoke about Lasco Distributors, and that stock is up over 60%. I also spoke about Massey, and that stock is over 20%. So as you can see, there's still opportunities even in a bear market. So it's time now to dive into my top 4 stocks that I will be buying before the end of the year. Let's go. Now, number 1 on my list today is Honeyburn Limited. Now, Honeyburn is a bakery in Jamaica specializing in producing individually packaged pastries and baked snacks. The principal activities of the company is manufacturing and distribution of baked products to the local and export market, and the company has a wide range of bakery products under its brand. So if you know Honeyburn, you can find their products in supermarket, gas stations, stores, gift shops, anywhere you can think about. It's a very popular company in Jamaica. Some of their popular products include their shorty loaf bread, their burger bread, their cinnamon raisin loaf, and they have their rum cakes, and also their donuts. Now, the company exports some of its products to the United States, the UK, and Canada, and we can see where every year the company has been managing to get at least a double-digit growth in their export department. Now I must mention about their dividend. So Honeyburn is a company that is not really one of the biggest dividend companies, but they pay a steady amount of dividend every year, at least 2%. So it's a company that you can look forward for, like high capital appreciation and little dividend. It's still a growth company, still on the junior market, so we still can expect the company to grow a lot. So they will be putting back some of the money into their company. Now, you see, Honeyburn is a company, when I look at their price to earnings ratio, it was at 11. And I think for the growth rate of this company, it's good. It's a company that's looking promising to me. And also, their price to sales at 0.92, which also is very good. And their price to free cash flow, which is one of my measures that I love the most, price to free cash flow, 15. So it's better than a lot of the other manufacturing companies listed on the Jamaica Stock Exchange. Now, when it comes to the last 5 years of Honeyburn, their sales has grown at a compound annual growth rate of 17%, and their net profit 18%. For the last 9 months, Honeyburn gross revenue has grown by 18.4%, and their net profit has grown by 46%. And total assets has grown by 15.7%. So the only year that has seen a decline was their return on equity, which declined by 14%. Now, so number 2 on my list today is Magaritaville Turks and Caicos. I did a video on this company about 3 weeks ago. You will find it in the description, so you can check out that video. But this is second on my list today. And Magaritaville Turks and Caicos is a company that operates a bar and restaurant under the Magaritaville brand name in Turks and Caicos. The company operates through food and beverage, and they have a gift shop segment. No, Margaritaville has shown a great promise of a huge turnaround, and I expect this company to be one of those that I can look forward to some capital appreciation. Sometimes this takes a little time, but eventually, once the company get back to normal, this will happen. So prior to the pandemic, Magaritaville was a company that paid regular dividends. And we can see where, in terms of the company rebounding, where cruise ship passengers has been increasing steadily. And net profits for the last 3 quarters has been improving. So I can see where this year will be a very profitable year, and 2024. So check out that video that I did few weeks ago. Now, the third company on my list today is Guardian Holding Limited. Now, Guardian Holding Limited is the parent company for an integrated financial services group known as the Guardian Group, which focuses on life, health, and pension and other casualty insurance. Now, Guardian Holding operates in 21 countries in the English and Dutch Caribbean, which include Trinidad and Tobago, Barbados, Jamaica, and the list goes on. Now, the company has traded, the 52 range for Guardian has been from $375 to $645. And here today, the company has fallen by 26% in its share price. So, it's one of those companies that has been falling over the last year. But one of the merits why I like this company is not just because of its performance, is a low relative valuation in comparison to other companies on the stock exchange and in its industry. Now, the company has been growing steadily over the years. So, and this is a company that pays dividend biannually, seen over the last few years. Last 2 years, I think, they have paid dividends twice per year. Now, the company price to earnings, when I check, was around 4, which is one of the lowest on the market. The price to book value is 0.95. And the company net profit has grown at a compound annual growth rate of 12% for the last 3 years. And bear in mind, this is a very huge, this is one of the biggest companies on the stock exchange. So for a growth like that, I still think this company is very good and is promising. So my top 4 and last stock today is Scotia Group Jamaica. So Scotia Group is a financial services conglomerate, and the company segment include retail banking, which include personal banking services, personal deposit accounts, and credit cards and loan, those type of stuff. Also, they have their insurance segment and their investment segments. So Scotia Jamaica is one of the most consistent dividend payers on the market. The company pays dividend almost every quarter, at least 4 times per year. Not a dividend video today, but this is one of those companies that pays good dividend and they pay very consistent. But on top of that, their quarterly performance has been very good. So the last quarter, we can see where they have improved. Interest income has moved from $21 billion to $29 billion. And their profit after tax has moved from $7 billion to nearly $13 billion. So Scotia is showing great improvement, one of the better, second largest banks in Jamaica. So in terms of the relative valuation, the company currently is trading at a price to earnings ratio of around 6, and a price to sales of 2, and a price to book of 0.93. When it comes to banking stocks, we don't really watch price to free cash flow, because the company in this industry, cash flow is a bit different. You cannot watch cash flow. But in terms of overall performance, very good. As you can see, price to tangible book 0.97 also. Now, when it comes to their earnings per share, it has been improving. Their return on equity has been very good. So another metrics that I look closely at when I'm evaluating a bank company is return on assets. And Scotia Group Jamaica has a return on assets of 2%, which is very good for a bank company. is very good in this particular industry. So here goes my top 4 stocks. So if you think these are some good stock picks, let me know in the comment section. Also, you can always suggest stocks that I should look at. I'm going to do a more detailed analysis on each individual stock, so stay tuned for those videos and look out. Watching, please remember to subscribe and like and share this video.